In this video, we will discuss how flood insurance is purchased, explain increased cost of compliance coverage, and provide an overview of the factors that influence insurance rates. These key terms and acronyms will be used during this presentation. You can find the terms and their definitions at the web address on screen. Flood insurance policies issued under the NFIP are underwritten by the federal government. They can be obtained through local property insurance agents. Agents may sell policies serviced directly through the NFIP. They may also sell policies issued through private insurance companies known as Write Your Own companies, who have an agreement with the NFIP to issue and service flood insurance policies. Regardless of whether the policy is issued directly from the NFIP or through a Write Your Own insurer, the coverage provided is identical. To apply for flood insurance for a building, its contents, or both, the insurance agent will work with the client to complete the application form, which requires information such as whether the building is residential or commercial, the construction date of the building, whether the building has a basement or crawl space, and other details about the structure and its contents. The agent or insurer will use the community's effective firm to determine the flood risk zone in which the building is located and may ask the client to provide an elevation certificate. Using this information, the agent or insurer will determine the rates for establishing the flood insurance premium. They will then submit the completed application, supporting documentation, and premium payment to the underwriter. Flood insurance coverage is available for a 1-year term. In most cases, a flood insurance policy does not go into effect until 30 days after it is purchased. This is to prevent people from waiting to buy flood insurance until just before the river rises and flood damages are certain. The primary exceptions to the 30-day waiting period include when the flood insurance purchase is prompted by making, increasing, extending, or renewing a mortgage loan, and when, because of a map revision, a building has been newly determined to be within the special flood hazard area. When a building covered by a flood insurance policy issued by the NFIP is damaged by flood, and the community determines the building is substantially damaged, up to $30,000 in additional coverage may be available to assist the property owner with the cost of bringing the structure into compliance with the community's floodplain management regulations. Known as Increased Cost of Compliance Coverage, or ICC, this coverage is in addition to the claims reimbursement for damages to the structure and can be used to help pay the cost to elevate, demolish, or relocate a building. For non-residential structures, it can also be applied toward the cost of flood-proofing the building. The process for determining flood insurance premiums can be complex, and the details of this process are beyond the scope of this video series. Generally speaking, however, a number of factors are considered in determining the premium for flood insurance coverage. These include the amount of coverage purchased, the deductible amount selected, the flood zone in which the building is located, building occupancy, and the elevation of the building's lowest floor in relation to the base flood elevation. Today, you have learned how flood insurance can be purchased and some of the other benefits associated with the purchase of flood insurance.